everybody. How's it going? Happy Monday to you. Sean C.
JVP.
from the Pearson Cusack Real Estate Group. Hope you're doing well.
I hope everyone's doing well. Happy June. June is upon
Happy
us.
June. June's upon us. So what that means is we are going to give you our June market update. So we're going to give you the stats from what happened in May and kind of project a little bit outward into June and give you some other interesting things that we've been reading.
Now, I know most of you love statistics, so
Yeah.
you'll hang on every word that we say. So I will try to get it through it really, really quick, not to bore you to death. All right.
Exactly.
I'm focused on the southeast end of the San Fernando Valley, which is the Sherman Oaks, Studio City, Valley Village, Toluca Lake area. And over the last 30 days, some interesting things. We had 111 new listings hit the market, which is great, except that we had 80 homes go under contract, and then we had 44 closed sales also during that time. So, you can see how it's eating up our current inventory. So, inventory remains very low. The most active segment of our market is that $1.5 million or less, and still seeing multiple offers. If you're a buyer in that price range, I know you get it. And if you're a seller and your home falls in that price range, it is now your day. So I think that's pretty interesting. Also, so if the new listings versus the sales, the average price per square foot for a sale was $627,000 versus $681,000 for the new listings. So we can see how the market's getting pressed higher. That's a 10% increase. And what I thought was a really fascinating fact, I don't know if I've ever seen it too often, is that the listing to sale ratio was 100%, meaning that everybody, some people may have gotten less, but then other people got way over their asking price. So the average was 100%. That's pretty crazy, isn't it?
That is.
So Sean,
Great.
What did you focus on?
I kind of wanted to focus on Conejo Valley, where I just bought a home, Thousand Oaks, and just give you some of the statistics out there, and we'll tie it up with something we found pretty interesting. So we focused on Agora, from Agora to Westlake Village, Newberry Park, Thousand Oaks. We wanted to just look at that whole valley. So first of all, which I thought was pretty interesting, there's 218 new listings across those cities. Okay, that's up 64% from April. So we are seeing that people are kind of catching on and realizing that it is a good time to sell, and things are opening up. They're getting a little bit more comfortable. The pendings and under contracts were up big time, 68 in May. In April, there was only 4. Okay, so it's up 1,700%. There was 51 closings in May, and I'm predicting that we're going to see a spike in June because there's quite a few in contract right now. Your average days on market is looking like 50 to 60 right now, about 55 right in the middle. And that average price per square foot at $504. I think the hottest price point is in the 800 mark, somewhere around there. Some of these cities are a little bit higher price point, like Westlake Village and Agora Hills, but kind of that median is that under $1 million, I think is hot out there. And so that's what we're seeing with May. But Jamie found a great article which kind of points to these to the suburbs that we're talking about, Westlake, Newberry Park, where you get a little bit more for your dollar, where you can leverage that. And what did you find?
Well, Zillow just did some research, and Zillow is predicting that there is going to be a suburban boom, which is reversing the last 10-year trend. We all remember about 10, 15 years ago, everybody was going outside of Los Angeles and getting for schools and families and bigger homes, and we're going to start seeing that trend resume itself. I think people are discovering that, first of all, that they're willing to drive more, They found that 50% of the buyers and sellers that they interviewed were willing to drive up to an hour longer than they're currently driving
Wow.
if they were able to get a bigger house with more space, which I thought
Got it.
was pretty interesting. I also found, and this is coming out of the pandemic, that 75% of the people that they polled um, anticipated that they were going to work from home um,
Hmm.
after the pandemic, and that their goal was to uh, travel 50% less. So work half of the time in a brick and mortar, an office space,
Yeah.
and then half of the time at home. And
Wow.
therefore, they thought space was more valuable to them than it was previously. So I think we're seeing some changes come out of this pandemic that are going to set the stages for the next few years as
Yeah.
as trending.
Yeah, I mean, I know my wife's office is full. I mean, they're almost all remote and they've set themselves up pretty well. And I have friends and other, and we are working remotely. I
Yep.
mean, I personally like being in the office, but I
Yeah.
think we see how easily with technology you can kind of get that distance.
Well, if even if we were in the office, we probably still would have Superman playing in the background. So,
Exactly. Uh,
working from home.
well, great. Hey, so why don't we share with the viewers what rates look like right now?
Oh, great. Glad you asked. So, something also very fascinating doesn't happen too often is that conforming rates, which is up to that 510 mark, and what they call high balance loans, which is 765, are at the exact same rate, which is
Oh, wow.
3.125%. So that's really good for those high balance borrowers. They're usually higher, it's a higher rate. So that's an excellent rate, and then we've seen that come down from the last couple of weeks. And we've got jumbo rates at 3.875. So,
Oh, great.
that also is lower than it was last time we quoted rates a couple of weeks ago. So,
Yep.
all that is good for the consumer. If you've got a job,
Yeah.
you can get a loan.
Yep. Especially in these markets that we're talking about, those are the types of loans that people are getting.
Yep.
So
So,
good.
lots of good news out there. I know there's everyone's still trying to figure out what's to do next, but as things are opening up, and it looks like at least the real estate engine is working as hard as it can to keep this economy flowing. So,
Yep.
yay for real estate.
Exactly. Well, great. Well, thank you for watching. We appreciate it. And as always, if you have questions, you can always reach out to either of us. Our contact information will be below, depending on what video platform you're watching
Yeah.
this on, or in our profile. All right. So
Thank
enjoy
you.
your week. And yeah, thanks for watching. Take
Be
care.
safe out there. Thank you.
See you later. Be safe.